This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, November 14th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn unchanged at 441.5. January soybeans were up a penny and a half at 1148.5. And December Chicago wheat was up 5 3/4 at 541.5. No export sales announcements yet here this morning. Hold on tight, guys. It's report day. In addition to the report, we are also going to get all flash sales between October 1st and November 13th. So it's going to be just an incredible data dump here at 11 o'clock Central. I know that'll be the main focal point of what we talk about here today. But Justin, I can't remember in a long time the amount of data and the volatility that we potentially could see here today. Should be pretty interesting.
Yeah, for sure. And I don't know why. I don't know why they're dumping it all at 11 o'clock. I don't know why they couldn't give the export sales this morning at 8 or 9. So you got to be careful that Ben and I were talking yesterday. I mean, just the volatility going into the close yesterday, the amount of contracts trading in futures and options, huge spike in vol, which was way too cheap. We talked about this a lot on the show, just how much people were discounting volatility. Whoever was the big option seller, I think kind of getting run in a little bit here going into this big report. So with the move yesterday, with kind of where we are breaking through, big key levels, I would expect a lot of volatility. I think the surprise would be if we didn't have volatility after the report. And you're going to have, as all this data that dumps in, you're going to have algorithms that are reading, maybe they read the yield number first and spike the market one way, and then sales numbers. And so I think you'll see a lot of sloshing around for the first, 30 minutes or hour for sure.
And it's interesting you bring up, heavy volume. Corn open interest there yesterday up 35,000, almost 17,000 in the beans. So, pretty interesting.
Place your bets. Place your bets.
Yeah. Is right.
Yeah.
Ben, what are your thoughts as we go into the day?
Violence, I think, is going to be what's going to happen. I think that if the report comes out negative, I don't think that anyone really has a huge appetite to get super short corn, or beans. So, but we've seen it where, you build, the buyers are in it and they don't get enough to get fed. And then we kind of, the one little pebble we cascade down. That being said, to Justin's point yesterday, there was a really rapid response to exiting a lot of positions. And, we talked about that 36, 37 area of how important that is. And potentially the fact that all this stuff is interrelated, and you're seeing again this morning, metals getting hit really hard. Equities, I know they made a high a couple days ago, but they've had a pretty rough couple days. But it was hit the eject button, and I think some people probably are trading ag markets larger than they should. Looking at yesterday, on the day there were 18,000 December 440 calls that traded. They were trading 1 3/4 on Wednesday morning. And I'm going to preface this with, it's really hard to gauge vol movements when you get inside 2 or 3 weeks because the options are really cheap. That being said, the December option, volatility option was up 12% yesterday at one point. So there was a get me out now mentality, 18,440, 7,445s, and 11,450s traded. That's a big number. That was half the open interest in every one of those contracts, pretty close. So I think that there may be some people, if you take their report out and you look at yesterday, it was an extremely positive close, right? But you have to be concerned that we get something today that's not so positive and we start to bleed out again, because we are looking at options expiration. We're looking at basis contracts coming home to roost 2 weeks from today. Maybe that there's enough technical strength that we can dispel some of this. And if we get a bullish report, who knows? Because they're definitely sent a sign yesterday that there were some people that were really nervously short some stuff. So violence. I keep airwaves talking soybeans about how bearish beans are, and I think that they've kind of closed the gap value wise. That was arbitrage that out of what we had when we perceived that we weren't going to be able to sell a lot of beans to China. Maybe we do, maybe we don't. But again, there's certainly over there you can see fighting a market that maybe it is rallying and it shouldn't be. I'm not going to make that judgment. I take the price for what it is when it's there. Is it vulnerable to a bigger setback? I don't know. I think there'll still be people to buy it on breaks.
Justin, on this data dump on the export sales side, I mean, certainly it seems obvious people are going to be looking for China. I mean, is that the biggest key?
Yeah, I'm one of them. I mean, I think, you've had this big rally, you're going to have to start proving it here. And we're going to get a lot of these. So like today's data dump, right, is going to be just all the daily flashes that we would have gotten if we were open.
Correct.
Versus they're going to time out, which makes no sense, but we're going to time out the weekly numbers between now and January 8th or something like that. So
yes,
it's makes zero sense. But that's what's going to happen. So yeah, we're going to be looking at these, what would have been flash sales, right? And I think if people don't see some China numbers in there, beans could be vulnerable. I mean, depending on what obviously the report says too.
Sure.
So.
Dustin, what do you got there? A lot to digest this morning.
Well, I'll know a lot more after 11. So. I don't know what I can add to that other than we just have to wait and see, right? Like we're going to keep saying the same thing over and over again. We just got to wait and see what it says.
Well, you're
11:15 is going to be a tough one for us to even get the data ready for the show.
Yeah.
So that'll be the challenge.
It's going to be a mad sprint, but the question is posed though, guys. I mean, like, you're a grower here this morning, and certainly, I guess, taking a look at everything, making sure you've got an acceptable outcome, and can be ready and prepared, because will happen.
Look, as a trader, right? Like all the good traders I know, you're kind of flat with bullets ready to see what happens. So if you're a farmer that's got a massive long position, right, you got to look at, what do I want to do to protect it? So you're sitting on the highs, everyone's happy, jacked up, let's go. You just got to look at the other side of things. So
yeah,
hopefully it keeps going. I mean, that's what we've been doing, right? Trying to get, just buying some options has been great, especially when you are low vol, because you had, like yesterday, vol cranked. A lot of those puts went up in value.
Yeah.
Because now people are paying premiums to get coverage. So.
Yeah, I think that the key is, and we actually had a customer send me a text this morning that kind of like there's some disgruntled people online that sold across the scale early in harvest and have not partaken in a lot of this rally. And I think it's just to highlight the importance of, kind of using these comparative advantages of government policy and crop insurance and trying to keep balance to the market. But we've had this rally now. Incomes have jumped for those that have had bushels that have not been sold yet. And so it's not monopoly money, right? This is like beans, any beans that you have that have been unsold on this $1.20 plus rally, like that's big money pretty quickly. And so I think that's important to recognize, is that like rolling up your floor, making sure that you have, captured some of this move is important, especially you go into these big report days. Dan, you posed a question yesterday, like what if yields are unchanged? I mean, yeah, there's going to be some people that downplay that, but at the same time, it's like we just went through two of the most bearish reports in September that in my experience, August and September reports, and then the September 30th stocks report. The last three major USDA reports were super bearish corn, and we've only rallied since then. So is that the market, the great calculator of the market, determining that we're really tight on supply? Or is it that, we just got a little bit overdone for a while, and then once we actually realize the supply comes, is that those sales still need to be made in the market?
Yeah.
So
Well, yeah, my theory on that, Dustin, is that, well, first of all, we've got a record export book on for corn. So we sold a tremendous amount of corn and the market got to a point where, I mean, we were talking about it where it makes any sense to sell. So you kind of went through that phase where every farmer that could stored or put up, there's guys putting up flat storage, anything they could to store, the market was telling you to do that. Right. So then now we're through harvest, but to your point, that makes sense why we've rallied 50 cents in corn. But now you got to ask yourself, okay, you're sitting on, which a lot of growers are sitting on, near record yields. I know there's some bad areas, but there's a lot of growers that have really, really good crops, and a lot that's unpriced. So you just got to factor all that in,
You do, yeah, and I get that there's a mismatch on how grains are flowing when there's a super strong export book in play, and we're talking a couple 100 million bushels more shipped, right, by this point in time. Can that continue? Absolutely can. But we're also talking about 900 million more bushels than we've ever experienced before. If we don't get a yield print that's lower today, which I would argue a lot of people are trading lower yields than what even the low guesses are on this report. Emotionally, they are, I think. Like, we still have to contend with a 2 billion bushel carryout and what that means for flat price in the end. And we have demand now. We have export demand now downriver. We haven't had a big competition for flow against beans because China has been absent. So yeah, like all of that makes sense of why we have a really good book on for corn. But like we've just experienced the last 2 years in a row, is that at the end of the day, if we're easily meeting demand by the very end of that marketing year, it's a completely different story. It's that everyone's so excited that demand's going to be strong now. It's not going to matter if we have a 2 billion bushel carryout, in my opinion. Right? In the end, it's going to be that March timeframe where you might have significant risk again. One of the worst things that could happen is you think you have all these comparative advantages like crop insurance, marketing your average coverage. If prices stay well enough up through Feb and then collapse into first notice day on a bunch
or stay
of
high enough, you're saying.
What's that?
You're saying stay high enough through Feb.
Oh yeah, stay high enough through Feb. Yeah. And then you're not triggering all these policy payments. And then you get like the 2023 going into 24 outcome. Like, I think that's where a lot of that equity built in 21, 22 was lost in, summer of 2024 because way too many bushels were carried through that time frame through deferred pricing mechanisms. So I just think it's just good to keep balance. I'm not trying to predict where it's going. I'm just saying I could see where it could turn into a problem if it starts to fall after these key dates.
Yep.
So.
Very good. Well, Rylan, speaking of problems, we got a problem in livestock. Another nasty day, price action wise. Headlines aren't helping out. Hogs are certainly no better. So one bright spot, I suppose, is we're going to get a cattle on feed a week from today. So at least we'll get some data there as well.
Yeah, hopefully that's a bright spot. I don't think anybody's really holding their breath for for anything at this point. I mean, it just seems like we've got expanded limits again today. We got 1375 limits in feeders, 1075 in the live, just because we ended up limit down in some contracts in the feeders yesterday. But yeah, it's been a bloodbath. I mean, obviously the reaction to the USDA announcing the sterile fly dispersal facility getting set up in Tampico, Mexico, that's probably what did it. It just seems like every little headline causes this massive knee-jerk response. I mean, at this point, cash is trading 228, so we're about $3 lower. But then all of a sudden, you look at the board and we're down $6. So it just there's been this massive liquidation. We're actually seeing open interest start to increase now. So it kind of feels like there's a new short in the market that's starting to build pretty aggressively, and possibly even has been, as we've seen kind of the managed money liquidation. So I kind of think that's a good sign, to be honest. But overall, it just kind of feels like, yeah, I mean, like the risk is here. It's extremely elevated to the downside, and we're just not getting a lot of good information to really stop this. It's just we're in it for some really big volatility, and obviously the administration is trying to get these prices lower, beef, cattle, through any means necessary. And there was a lot of talk just in the news in general about food prices coming down with tariff reductions. So there's a lot of that talk right now, and I think that the protein markets are really starting to suffer on account of that. Maybe even encourage some extra shorts, you know, at this point. So on the hog side of things, really, it's kind of same at price action. Sharp losses yesterday. You got cash down 92. Maybe the WASI report kind of gives us a little bit better supply indication. Maybe things that can help a little bit. I think the impression is still that supplies were kind of tight coming into this point, but it does feel like the market was surprised by something a couple of months ago and really just has not been able to recover. So I think you got a lot in the headlines that have been kind of negative, kind of baked in here. We are definitely oversold. So a recovery bounce is probably in the cards, but at this point we need to see stability in the fundamentals, and we just haven't seen it yet.
Yeah, I just want to add one thing to that. So, you know, you brought up some good points, but I think a lot of these, you look at how much spreading there is now, and these new players, and I say new, but like say the last 10 years, these giant equity players that are playing in commodities, they're playing in Bitcoin, they're playing in everything. And you look at when they rotate out of stuff, or when they, you know, you're getting towards the end of the year now, and you see, you know, cattle, livestock at all-time highs by a mile. You see grains, you know, basically being the, you know, pissing post for a year, right? And then you know, tech's been hot and other stocks have been bad. And then you see when these big players rotate, maybe it's not a coincidence that as cattle's getting hit, corn and other things are rallying, meal are getting a bid. A lot of those could be the same players that are getting out of massive positions, that, you know, getting out of cattle, getting out of the short corn, whatever that trade is. You see it like meal oil. You see it consistently where they go the opposite directions once they start going, because that's the trade that these people have had on. So
right. No, and like we were talking about yesterday, it just kind of feels like there's some big players that are either liquidating or just exiting out of these really popular trades, whether it be like AI, gold, Bitcoin, just like you said. I mean, it does feel like there's some massive repositioning going on going into next year. So, I mean, I hate to say it, it feels like the meats were part of this big trade kind of into the fall, and then it just stopped, you know, for whatever reason. I mean, there could be just, I mean, it could be coincidental, could be just individual, you know, fundamentals of those markets, but it is a little bit strange to see it happening to such a large degree in a lot of these bigger markets, you know, like equities and Bitcoin.
Right.
You know.
But it could just be liquidation fear too, right? Not necessarily rebalancing, but it just feels like there is fear out there in equities, in Bitcoin. So just, you know, exiting, you know, getting on the sidelines type of trade until, you know, and we're kind of getting to the end of the year, which is
they've had big years, right?
Yeah. And it's common for guys to start taking stuff off the table this time of year too.
Right.
And they're so big, it just to them it might not feel like anything, you know. Like, yeah,
well, that's the thing is that well, that's my point, is we can look at corn, for example, like, oh my God, like the market knows something. It must be super bullish, right? And it's just no, some hedge fund manager had to get out of 50,000 stuff.
That's what my dad used to call,
you know,
random dispassionate movement of capital.
Right. Yeah.
There you go.
So
very good. Well, we made it through another week, guys. Bri, it's Fun Fact Friday. What do you got for us?
Thanks, Dan. Happy Friday, everybody. So if anyone's ever smoked, you know how hard it is to quit. They got gum, they got patches, they got hypnotic sessions. But really, the only thing you ever need is the first cigarette sensation tool, the Pez. Born in 1927 in Germany as a breath mint to help smokers stop smoking in a lighter-shaped dispenser. Never knew that. Gets over to the pond in 1949 after World War II. Kids are trying these things. They hate the peppermint flavor. It only came in peppermint flavor. So they added fruit flavors, put a Santa head on it in 1955, and the rest is history. Now Pez is a $50 million a year company. Here are some funny reject flavors. Chlorophyll, They thought it was healthy.
Chlorophyll.
Yeah, it
More like
tasted like
chlorophyll.
yeah, it tasted like grass clippings. And then they went to the eucalyptus route there. They looked like, hey, we'll get a little cough trap going. It was so strong, people were sneezing and spitting out the Pez as they were having a little consumption. Here are some funny dispensers. 1950, they come out with a space gun dispenser that shot Pez like ammo. Obviously got banned for many reasons there.
Oh, man.
No, right? A Florida man actually tried to rob a bank with a Pez gun.
Florida man. That's
yeah, right? Yeah, Florida, Ohio, we should do it. Yeah, clerk laughed, cops came. And here are some of the most expensive Pez dispensers, Ryland. So if you're at your next garage sale, rummaging around,
Snatch
you want to
them
be on the lookout for these. The 1982 World's Fair Knoxville, Tennessee Astronaut B sold in 2006 for $32,205. This is probably right up Dan's alley. The Prince William and Keaton Middleton wedding dispensers. It's a combo. Sold for $10,500.
Yeah, I got 3 of them. So.
The soft head Mickey Mouse, anything Disney is like around $7,000. But if you do come across this one at any kind of little, secondhand store, this is where you can actually you can retire if you come across this one.
That one just keeps dispensing no matter what.
Yeah, I mean,
you don't know what you're going to get out of it either.
It just opens up the napkin
Just opens its mouth and shoots it out. Yeah.
spews out garbage.
Oh, it's terrifying.
Happy Friday,
What flavor is
everybody.
that? Yeah.
Oh, God.
Yeah.
Meat flavor.
Coffee.
Yeah.
God. Need to put the
flavor.
screwworm mask on it. That's the really.
I still got it, but I ain't wearing it.
Oh, very good. Again, guys, we got reported 11 Central. We're going to be back at 11:15 to give it our best shot on going through the numbers and giving you our reaction to the report. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. Let's get a quick readout before we go. December corn's down a penny at 440.5. JM beans are up 3/4 at 11.47 3/4, and December Chicago wheat's up 3 3/4 at 539 1/4 is the last. So again, we'll be back at 11:15. Until then, thanks for tuning in.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.